Hello, what's up guys? It's your boy Kevin here, and today I'm going to show you step by step on how we can mark the market structure. We normally have a market structure, let's say a downtrend, a market structure that is a downtrend like this, up and down, up and down. So this is a lower low, lower high. Okay, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and a downtrend. And then there is a higher high, higher low, higher high, higher low, higher high, and higher low, and higher high, and finally higher low. From a downtrend to an uptrend. So as you can see now, for the downtrend, we see that there is a break of structure here. So this is the highest high, right? So this is the strongest high. It's the strongest high because it has taken this low here, right, to form a new low. Then we have another break of structure here. This is another high. This is a strong high, and the same as this one. This is a break of structure here. There is another break of structure here. This is a break of structure, and another break of structure, and another break of structure. So we see that this high takes up this low, right? So this is a higher high, this is a higher high, this is a higher low. I mean, this is a lower low, this is a lower high, lower high, lower low, lower high. And when it reaches this point here, the lower high takes up the lower low over here, right? Then we get a lower low down below here. But there is something that is happening here, a change of market sentiment from bearish now to a bullish market structure, from up to down, right? But here there is a change of character. So this one is a break of structure. Let me just level that. There is a break of structure, and there's a break of structure, and until it reaches here, then it broke structure. This is the swing high that led to this break of structure. We only assume that the market is going down unless we get this break of structure. Once we get this break of structure here, now we see that the market has changed sentiment from now bearish to bullish, because now this strong high has been taken out to another strong high. So this now becomes our swing low, right? So it's the strongest low now. This is our strongest high because it took up this low. If the market went this way, then continued down, then that means this would be our strongest high. But because this low here has taken up this high, now this one becomes our strongest low, which is our swing low. This one here becomes our swing low, and it takes up this. Now we get another break of structure. So the market has changed some sentiment from a bearish move to bullish move. So there is a break of structure. So we can just label that break of structure. There is that break of structure. And when it reaches here, then what will happen is the market will go down and break this structure here. And then the market will now change sentiment from bullish to bearish. This is where we get the break of structure. For this break of structure, it changes from one market trend to another market trend. So this now becomes our break of structure. Other people call it change of character because it has changed from bearish move to a bullish move. And this one is another change of character. Now this is a break of structure because it has broken this high here. So the low is responsible for breaking up this high. So this now becomes our swing low because it has broken this high. So this now our protected low. So the price will not trade past this point here because it's now responsible for this mark. Whenever the price moves from this point and then wicks below here, there will be another change from market sentiment because the overall market was downward, and then there was a pullback because after every downward move there is always a pullback. Let me just show you this one on the charts. The market was going up, down, up, down, and up. We see that there is a break of structure. There is a break of structure here, and then there is another break of structure. So that was a bullish move, and as you can see, there was a market sentiment. Let's take from here, from this chart. This is a Euro USD. We see that there is this move for our move. So there was this move here, and then it went down, and then there was another move here that was going here. So this one was a downtrend, and this is now an uptrend. This is now our swing low, okay, because it has taken up this high here, and then we see that there is a break of structure. Now here there is a change of character. We see that there is a change of character. We only assume that the market is going up until this low is taken out. Whenever this low is taken out, we still know that the market is still moving downwards. And there was a bullish move. But since this high here took up this low, then we assume that this is now our strong high. We only trade in between this high until it's taken out. So this now becomes our swing on a 4-hour market trend. Now this one will be now our strongest high. So anything, we assume that everything is going down until this high is taken out. That was our downtrend. Now this is another breakout structure. Which one was the high here? This is now the high that took up this low. Now becomes our swing high. But we see that this swing high is taken out. For a 4-hour time frame, we see that this one was the high. This is our swing high that broke the structure, broke past this low here. Now this one becomes our swing high. This is now our protected high. Once that protected high is taken out, we assume now the price is moving up. But sometimes this is liquidity. The price finds the liquidity is somewhere else. The low does not take up this high. So that means it was just a liquidity sweep and then the price moved down. The price did not trade past this point here, because it was a protected high. So this strong high then took up this low. Now this one becomes our swing high. After taking up this low, then we assume that the market is changing direction from now bullish, and then the price came down, right, to take up this low here. So this is another breakout structure. It shows up that the market is now going down. So this is now our protected high. Whenever this protected high is taken out, then we assume that the market is going up. Then we see that it was wicked a little bit, and then we find that this is now our strongest low. So unless this low is taken out, we assume that the market is still bullish. Now we see a change of character here. This is our low. Now this is another change of character. According to me, this is now a breakout structure. And then when it goes up, this is another breakout structure, and then this is now our low, and this is another breakout structure here. Now this is now our lowest low that led up to this breakout structure. So whenever this low is taken out, we assume that the market sentiment has now changed from a bullish move to a bearish move, because our internal structure has been taken out. Now this is our internal structure. Now we are looking at the market on a 4-hour time frame. So when this low is taken out, then we assume that the market is now bearish. The market is bearish until this high is taken out. Now this one now becomes our 4-hour strong high. So we assume that everything is going down till this 4-hour high is taken out. Because we see a change of character here, or a breakout structure downwards, is like here. At this point, we are here because this was a high that is responsible to take up this low to get a change of sentiment. That's why we see that a change of sentiment is happening right here. Whenever there is a change of sentiment like this, we see that the market is now ranging down. So that's, we get a breakout structure, then we get another breakout structure, and any breakout structure with this kind of moves, we only want a candlestick breakout structure. We don't want a weak breakout structure. If the breakout structure was a weak like this, then we don't consider that a breakout structure. We need a full body candle like this to get a full breakout structure, and that's why we get another breakout structure, and then we get another breakout structure. This is now our 4-hour breakout structure. This is now our high, our strong high. After getting that 4-hour strong high, and then now we find out our moves. Let me just select a bar replay to, let's say here. Let's assume that we haven't marked this. So we see this is a breakout structure, and our strongest low that took up this high, the market didn't change because it was just a liquidity sweep, and then this high is responsible for taking out this low to make a lower low. And then this low, we see that there is no breakout structure here. The price didn't trade past this breakout structure. We are still looking at breakout structure. That's why we get this, the double top here. Well, let me just play up this. So we assume everything is ranging in between until this low is taken out using this high. So once this low is taken out, then we can consider this as a swing high. So let me just replay the bars. You see, boom, Now we get a break of structure here. We need a candle close below this break of structure line. We get that this is our high. We assume that the market is going down until this high is taken out. So when this high is taken out, there will be a change of market sentiment to show something like this. This has a one move, then down. Then when something like this happens, then we see a change of market sentiment. That's why we draw up this line here, our swing high, until it's taken out to find if the market is now changing from bearish to bullish. So let me just play this one out like 3x. Now we get this down. Now we don't consider this as a break of structure because it is not enough pullback to count it as pullback. So this is just one move to the downside, and then something like that, right? So that one was a down move. Anything that is bigger like this, we consider it as a pullback. But anything smaller like this, we don't consider it as a pullback because it will not trade past this, our protected highs and protected lows, right? And then when we play back, now this is enough pullback now. We didn't consider this as a pullback. It was just a minor pullback. And then we consider this as a one leg, but to this point, now this one becomes our protected high. Unless we get a signal that shows us that the price is now going down, then we'll mark this as our swing high, right? So let's do a pullback. The price now trades past this point here. Now this now becomes our strong low, and this now becomes our weak low. This high here, and if they see there's a pullback, there's a minor pullback. That's now enough pullback, right? This is now enough pullback to consider this as our newly created high. So we use this low to create this high. So that's why you can see we don't consider this as a pullback because something can do this, can do this, and then go down. That's why we don't consider this as a pullback, a minor pullback. Okay. Then we mark these strong points that are protected. So if the market trade past this point, then we see that the market has now changed sentiment. That's when we can get better trades, when we know that the market is now moving up. So we only trade when the market is moving up or market is moving down. If the market has not enough pullback to consider that as a move, then we don't mark it as a single move. If you are trading, we don't take any trades until this height here is taken up. If let's say we take a trade from here, we assume that the market is now going down. Okay, this will be a loss because we took like maybe these small pullbacks and then the price went past it. That's why we are losing the trade. But we don't trade until this high is taken out. Instead of looking for shorts, then we should look for longs, trading upwards. That's why we don't take any trade until there is a full break of structure. Then we can now look for longs after that. We're expecting a pullback anytime after break of structure. That's why after this break of structure, we get a pullback. And then we take some long positions from that pullback. The market was going up. The market is now going up because now we take the long position because we only trade after that break of structure. We'll do some technical analysis each and every single day to see how the market is moving, and I will also show you how you can trade the market using the market structure. We'll see you on the next video.